Good morning traders and welcome to the daily call today, Monday the 10th of April. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, so let's have a look at what's happened the last session of the trading week last week. In the UK, we had the sterling ending the week lower against most major currencies. This of course helped one of our trading challenge trades, so I believe we've hit target 1. I will send out those details shortly. The data basically was mostly weaker and likely to worsen in the UK as the UK moves towards the European Union, the leaving process. So although the service sector activity had accelerated, the manufacturing and construction, which came up on Friday, slowed down for the month of March, and the production number was at minus 0.1%. In Canada, I guess the latest Canadian reports were strong, with more than 19.4 K jobs being added for March. Unemployment came in at 6.7%, stronger than expected, and I guess with that and the combination of oil prices rising really helped the Canadian dollar this week, which was heavily falling, so it stabilized somewhat. The major news, I guess, really happened in the US. Of course, we had non-farm payrolls. They came in the middle of a whole bunch of geopolitical risks with the airstrikes that occurred from the US onto Syria, and also at the same time we were having the Chinese-US summit occurring. So non-farm payroll, which is kind of strange, took somewhat of a back seat. For the record, the unemployment change was down to 98,000, but was slightly offset with a decrease in unemployment rate. The data itself was weaker than expected, but positive from the positive outcome from the US-China summit and investors moving towards US dollar safe haven type scenarios helped the US dollar hold on. So if you felt that the data was not relatively strong and the US dollar still went up, those were the main reasons for that. Okay, alright, it's time for us to have a look at the chart of the day, and the chart for today is the Aussie New Zealand dollar. As you can see from my chart here, I've clearly highlighted a hot region where the market has previously acted as resistance. You can see my arrows over here on the left. The market's come to that level and kicked off quite a few times. Finally it breaks through. It has come back to the level, kicked again, and we are there one more time. Now, at the time of me taking this screenshot, I still need to wait for the current candle, this little blue one that my mouse is on right now, and essentially if it remains an inside candle, we'll have a trigger. Also look out, we could have a 3 candle formation, price reversal formation, because that this candle over here has got a long tail, so this one becomes an engulfing and gets to about halfway of that one. That will also be a signal, so we'll have to look out for that one. But the bottom line is we need to wait for the current candle to complete, and we could have a trigger as a buy on the Aussie New Zealand dollar. So that's our chart of the day for today, Monday. So what's happening in the session that is about to unfold? Well, there's not a lot. The only thing that we have today is, well, actually it happens tomorrow morning, 6 o'clock in the morning, at 10 past 6. Miss Yellen will be speaking, and that of course is in my local time, which is Australian Eastern Standard Time. As always, guys, if you do have any questions, please feel free to contact us. Follow me on Twitter at ChatFX for trade setups and breaking news. For those of you who come to the Monday full 1 hour analysis, I will see you at 3:30 this afternoon. And other than that, I hope you have a great trading day, and I will speak to you tomorrow on the Daily Call. Bye for now.